lost. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Good morning, everybody. Welcome to the morning show. Spencer Israel here with you. We've got JC Parets lurking backstage. I hope you had a great, enjoyable long weekend. I myself am still recovering from the 3-day weekend, but we got a lot going on today. We got Michael Nauss joining the show at 9 o'clock, so about a half hour from now. We got Kimmy Sokoloff lurking at 9:15. Patrick Dunuwila, editor of the Chart Report, at around 9:30. And then we'll take questions from the chat, as we always do. We've got some good charts for you in our deck today. So strap in, smash that like button. Here's the morning show. So I was a little nervous last night, JC. I was like, is JC going to be in a good mood this morning, or is he going to be in a really bad mood this morning? Well, I guess you're in a good mood this morning because the Heat won.
You bet they did. You know, We like to do things the hard way sometimes, Spencer. They could have finished it up a week ago, but they decided to make it interesting. The NBA got paid a lot more money, a lot more advertising revenues for a few more games, and then we went into Boston and put a whooping on them, and just a sad state of affairs there in Boston. First city ever where they lost Game 7s to 8 seeds in both basketball and hockey in the same year.
At home.
So talk about a city that decided to just throw it all away this year. But one for the good guys, Spencer. One for the good guys. We talk about Sean. Sean lives in Colorado, so all of a sudden he's a Nuggets fan this year. But let's keep it real. I've been there since day one.
All right, that you have. Literally day one.
Literally day one, 1988. I was there.
Let's get to state of the markets. JC had some great emails over the weekend with some great stuff. We're going to recap some of it for you right now.
All right, guys, listen, I love that we do this sort of state of the market segment every day. It kind of helps me, sort of frame what I'm thinking, what's going through my mind. And, when you talk about this stuff on a day-to-day basis, I think it really adds a lot of value. I talk to a lot of people, I've got my ears to the ground. I hear a lot of things. And one of the things that I'm hearing is how bearish it is for the equally weighted S&P 500 to be underperforming the market cap weighted S&P 500. Bloomberg was out this weekend talking about how it's the weakest market breadth in 20-something years or something like that. So even Bloomberg, that you would think that there's some intelligence and experience there, but I guess not. The equally weighted S&P 500 relative to the market cap weighted S&P 500 is just another way to express sector rotation. Here we're looking at value versus growth. Notice how the ratio between value stocks and growth stocks looks exactly like the equally weighted S&P versus the cap weighted S&P. And the reason for that is because there is just so much tech and growth in the S&P 500 that when you equally weight it, you're going to get less of it. So if tech and growth are outperforming and they're the sector leaders, which, by the way, there's nothing bearish about tech and growth being sector leaders. Just to be clear, there's sectors, if anything, they're offensive sectors. Now, if it was utilities and staples outperforming, now something like that would be bearish, in my opinion. But or not necessarily in my opinion, but historically it is bearish. This is simply sector rotation. That's all it is. Notice how in the back half of last year, these ratios were going up. The equally weighted index was outperforming the cap weighted index. That's because growth stocks were underperforming. Last year, they were all bitching about how bearish the market was because the biggest tech companies weren't doing well. Now they're bitching about how terrible the market is because those are the companies that are doing the best. I think just people just like to be angry. Take it one step further. Take a look at the next chart. Now we're looking at the exact same thing. This is the equally weighted S&P 500 versus the cap weighted S&P And then below it, you've got the S&P 500 versus the NASDAQ, and you've got the Dow versus the NASDAQ. Another thing that you're hearing is, oh, the underperformance of the Dow, the underperformance of the S&P 500. Again, the NASDAQ has a lot more growth, a lot more technology than the S&P 500, and certainly the Dow Jones Industrial Average. So these ratios between the S&P and the NASDAQ and the Dow and the NASDAQ, value versus growth, equally weighted versus market cap weighted, they all move exactly the same. They move together. They move in sync. I'll move on to the next chart because I want to show exactly what the Nasdaq 100 is doing, and then what the equally weighted Nasdaq 100 is doing. So here you're looking at the Nasdaq 100, which I'm told we're in a bear market, but every week it makes new 52-week highs. So it's the funniest looking bear market I've ever seen. And then I get, oh, JC, it's only 5 stocks. Well, here's the equally weighted Nasdaq 100, also making new 52-week highs, which by definition means that it's not just 5 stocks, right? And the people that are like, oh, it's only 5 stocks, like, how old are you? Like, did you not take math class in 3rd grade? Like, it's free data. Like, we have the data. There are hundreds, if not thousands, of stocks that are going up. It's not just 5. And it's not just the equally weighted S&P 500, the equally weighted NASDAQ 100. You've got Germany making all-time highs, Denmark all-time highs, France all-time highs, United Kingdom all-time highs, Japan making 33-year highs. Do those 5 stocks that are the only ones going up also trade on those exchanges? Greece is making new 52-week highs. Are those 5 stocks trading on the Athens Stock Exchange as well? Obviously not, right? Another one I want to point out here is NVIDIA. I don't know if you heard, big moves last week. Big moves for sure. Notice how semiconductors are still not making new all-time highs. NVIDIA already is on pace, just a couple of billion away from being the first $1 trillion chip company, first semiconductor in the world to hit $1 trillion in market cap. We're not quite there yet, unless it's moving more pre-market than it was before.
Yeah, it is, JC.
Are we getting close? Is it getting close? It looks like it's getting close.
Pre-market high this morning 409. So if right now it's 407. So if that holds, then yeah, you betcha.
Yeah, because look, so if you're looking at a 5% move and the market cap was 963, as of right now, pre-market NVIDIA is $1 trillion company. Let's give a big shout out to NVIDIA, first $1 trillion semiconductor company. I mean, that's a big deal. That's a big deal. So really, really interesting. And then finally, I just want to finish on the sector rotation aspect. People are like, oh, weak breath. Oh, it's only 5 stocks. Like, all that stuff is nonsense. Like, they're either lying to you or they need to be checked into a mental institution, because none of that is true at all. Actually, it's the opposite. The sector rotation, if you want to go to the next chart 7 here, if you want to go to the next chart, the sector rotation is actually incredibly constructive. You're getting new 52-week lows in consumer staples relative to the S&P 500, new 52-week lows in low volatility stocks relative to the S&P 500. And these are the sectors that historically outperform when stocks are under pressure. And are they outperforming because stocks are under pressure, or are they severely underperforming because we are in a healthy stock market environment? And then finally, you can see here, flip that around. You've got the S&P 500 as the numerator here, and then low volatility and consumer staples as the denominator. So as these blue and black lines are going up, that's consistent historically with the S&P 500 also doing well, stocks doing well, a healthy stock market environment. And then you've got technology sitting here at 26% of the S&P 500 making new 52-week highs. S&P is making new 52-week highs relative to staples and low volatility. So if all of these are making new 52-week highs, where do you think the S&P 500 is going to go? You think it's going to go lower? Right? I don't necessarily know. You want to push back at it all?
I titled the show today, I titled the show today, Are We in a Bull Market? And some of that was just to get some of that juicy YouTube search, but some of that was also just, in jest, right? But it's a question I want to ask you, JC, because, you mentioned that people have been hanging on to this idea of a recession or a bear market now for close to a year at this point now. But the charts speak for themselves. So, were you in a bull market?
Yeah, I mean, listen, I've been talking about how we're in a bull market since last summer,
It's true.
right?
You have.
The list of new 52-week lows peaked last June. It's going to be June in 2 days from now. That was a year ago almost. So,
Yep.
I mean, listen, forget the S&P and the recessions and the Fed and all this stuff. Let's just ask ourselves a very simple question. In what happens in bull markets, right? What do bull markets look like? First of all, you've got a lot of stocks going up in bull markets, right? Like, let's just use common sense. More and more stocks go up, more and more stocks make new highs, and more sectors make new highs. The offensive sectors are the leaders, right? The defensive sectors are the laggards. More countries around the world are making new highs. Go down that list. Are those things happening or are they not happening, right? Unanimous. They're all happening, right? The safe, nobody wants the safest stocks, like the most defensive stocks like consumer staples, utilities, healthcare, low volatility, all of them making new 52-week lows on a relative basis, which is perfectly normal characteristic for a bull market, number one. Number two, are we getting more and more countries outperforming? Are we getting rotation into countries that had been underperforming for a long time? Yes, Europe is the leader. Just because your country is underperforming doesn't mean it's a bear market, right? Go back 100 years, study every bull market in history. You know what you'll find? You'll find a lot of instances where the United States underperformed. It's perfectly normal, right? So Europe is outperforming. Japan is doing great. Those are the things that happen in bull markets. Okay, what about the things that happen in bear markets, right? You get a lot of stocks are going down. You're getting consolidations resolving lower. You're getting expansions and stocks making new lows. You're getting more sectors. The offensive sectors are the laggards. The defensive sectors are the leaders. You get more countries around the world breaking down to new lows, right? Those are the things that happen in bear markets. Are any of those things happening? None of those things are happening. So you go down the list of the things that you see in bull markets, and all of those things are happening. And you go down the list of things that happen in bear markets, and none of those things are happening. And in bull markets, as they like to say, the market likes to climb a wall of worry. So when you're like, oh, but the recession, JC, and the war, and the Trump, and the inflation, and the Fed, and all these things, go back to every bull market. You had a laundry list of items that had people scared, and that's a good thing, right? Because if everybody was it's a good thing if you own stocks. Not, I don't necessarily care. It's not good or bad. It's just what it is. If you own stocks, it's good that everyone's bearish, because if everybody was bullish, there comes a point where if everyone's bullish, everybody's already acted upon that, and it's probably time to be selling. But the fact that stocks keep making new 52-week highs, more countries are participating, we're in a raging bull market, and people think we're in a bear market, and people are we have historic net short positions among big speculators in the futures markets. Like, you have obscene pessimism in a bull market that's over almost a year old. So to me, that's just more fuel to the fire. Like, that means that we're not even close to the top. You got people talking about a bubble. The Nasdaq's still 15% from its highs. Like, we're well below the former highs from just a couple of years ago. And people think we're in a bubble. So I just think people are so confused. And what I like to call it, respectfully, is the head up your ass syndrome, right? Because it's just science. If you have your head up your ass, you can't see what's right in front of you. It's impossible to see what's right in front of you if your head is up your ass, right? And I think that just a lot of investors are just, have this syndrome, right?
Yeah. 2 points I want to respond to. One, you mentioned the wall of worry. One of the wedges, if you will, on that wall right now is the debt ceiling, which one way or the other is going to resolve itself by like Monday, right? The deadline is Monday. So, and we all know what's coming there. They're gonna resolve it like they always do.
Didn't
right?
they resolve it over the weekend? Didn't we already get that? Are we past that?
Kind of, sort of, maybe. But so that's going to be out of the way in a week, right? And then the second thing is, it's we have very clear, like you said, we have very clear leaders and the laggards, right? And it seems like the fact that technology is leading so much again right now. Do you think maybe some of the reason that people are giving it pause is because the last time we saw tech really outperform like this was 2 years ago, and that was followed by disastrous 12-month period for tech, right? So do you think maybe people are just scarred from 2021 and last year?
I mean, I don't know. Tech was Tech was outperforming throughout 2016 and 2017, and
Well,
those were great years.
actually, for like a decade, 2011 to 2021, really, tech outperformed for 10 years
Well,
there.
take it on a year. I mean, there were times throughout that where tech underperformed. So I'm being a little bit more micro, and a little bit more specific. But like 2019, tech outperformed the entire time. 2017, tech outperformed the entire time. These are some of the greatest years in history. So tech outperforming is not bearish. I don't know who in their right mind would ever think that. There's no evidence at all historically that tech outperforming is bearish at all. Quite the opposite. I would consider it one of the more offensive categories. And in fact, if you're talking about like historic outperformance in technology, like again, those are people who clearly have not studied the data and gone back in history, because we're nowhere near the 2000 highs in technology relative to the S&P 500. We're nowhere near it. So if you think this is a bubble, we're not even back to those highs yet from 23 years ago. You think this is a bubble? We're not even close. Like, so the fact that you got some people who think it's a bubble, some people wondering when the bear market's going to end. Like, just think about like how confused people are, because, and I'll tell you very simply why it is, because they're following narratives. They're listening to the news instead of just looking at what's actually happening. Like, am I crazy? Because I focus on what's actually happening instead of what some journalist thinks might be happening. Like, what? Like, just seems like common sense to me.
Yeah.
Am I jaded because I've been doing this so long, or there's people there's people who've been doing this a long time too that are just as confused. So I guess it can't be that.
No, I think you're totally right, and I'm as guilty of this as anyone. Is just, it's easy to just get lost in the noise, right? When you look at price trumps all, right? So
it's the final arbiter, right? It's not like, oh, you're right, he's wrong. It's not about that. Like,
right.
Price is the final arbiter. It's the only thing that's going to pay anybody, by the way. People are like, oh, but we can't buy stocks because PMI hasn't bottomed, or whatever it is they say, or, leading economic indicators or whatever. It's like, what are you talking about? Like, what?
Right. Yeah. Look, we've discussed this before. We all want to tell ourselves a story, but, and that's fine, I guess, if it helps you sleep at night. It helps me sleep at night too. But, yeah, price don't lie. So that's probably, good takeaway. So
a lot of manipulation, Spencer, is what I'm told. It's manipulated. It's being manipulated.
Yeah. A lot of the charts that JC had just talked about in that last segment and was discussing were sent out over the weekend to members of All Star Charts. I'm going to put a code up on the screen right now. This is a code to get the free All Star Charts chart of the day email. Did I mention the free part? I believe I did. Scan that code, get the chart of the day. That will get you into the door, and then you'll see, oh my gosh, this research is ridiculous. I have to have it. So All-Star Charts, chart of the day, use that code on the screen, and you'll start getting some of the research from All-Star Charts from JC and the rest of the team, because it really is fantastic. Okay, it's 8:49. We're going to have Michael Nauss join us in 10 or so minutes from now, and he's ready. He's already here. I see him backstage. We got he sent over some charts. Thank you very much for that. We got Kimmy Sokoloff. We got Patrick Dunuwila. We got a good show today. Okay, what else was on the list to discuss? We have, let's bring up the calendar font if you can. Thank you very much. So we are finally coming to the end of earnings season here. This is what the earnings calendar looks like for the week. You can see not much. Some value tech today, Wednesday afternoon, Thursday afternoon. Those are the big ones. We got Salesforce, we got Okta, Broadcom, the Dell VMware combo. We got some retail as well. CrowdStrike is Wednesday morning. Lululemon. I was in a Lululemon yesterday, JC, and it was packed.
I heard you could just steal things from Lululemon, because the people that, if they won't call the cops on you, because if they call the cops on you, they get fired. That's what I heard.
I don't know anything about that.
What was that all about?
But let me tell you this. Yesterday I waited on a line to get into a Lululemon, I swear. That was
Listen,
my day.
Spencer, you and yoga pants is one of the best things that I can think about.
I was with a group. I was taking one for the team. I wasn't there for me. Plus it was
I don't know, Spencer and his
yeah.
yoga pants. That's a sight.
Yeah. So anyway, this is the calendar. Not much to see, but we will discuss some of the big ones throughout the week as they come up. Oh, C3AI. That's a big one. They're up big today. They're part of this AI quote unquote bubble. I don't know. But they're report Wednesday afternoon. So
Stocks
that'll
up
be one to watch.
12% pre-market.
Yeah, that'll be one to watch for sure. So have that on our minds. Okay, and then we had a bunch of charts in here from that Strazza had dropped in, and we had discussed last week. Where should we go? Let's talk about. I'm just going to scroll here a little bit and see what we got.
Punch up the software. Slide 15. That's a good one.
All right, punch up slide 15. What do we got? Oh yeah.
Well, I just want to reiterate sort of this theme that we're seeing, and you could see it in AI too, in the AI stock, sort of, this bottoming, sort of looking situation since the first half of last year. That stock that you just brought up, the C3 AI, which is about a $4 billion stock. But this is software in general, and you're seeing it among a lot of growth stocks, and not necessarily the mega cap names, but sort of those SMIDs, if you will, the small caps, the mid caps, the smaller, larger caps, if you will. You're seeing these bottoming patterns. These bottoms are not an event. They're a process, right? And the process really began in the first half of last year, right? So if you're wondering, if you're looking at charts and, you're going through and looking for ideas and you see something like this, by the way, if you're going through charts and you're looking for ideas, you're going to see a lot like this, right? There's a lot of them that look like this. And the common theme that we're seeing, the common denominator here, pun intended, I suppose, is that the resolution is to the upside, right? And this software, and if you want to pull up the AI, do you have the AI chart, or you want me to just share that quickly? I'm happy to share it quickly, the AI chart.
I don't believe we have AI. Oh wait, the C3 AI or the AI ETF?
No. The C3 here. I got it.
No. Yeah, I don't think we have that.
I'm pushing it up right now. So this to me is what we want to look at here. It's the exact same thing you were just sharing, right? It's literally the same thing. Why can't I just pull? Oh, here we go. I'm putting it in the chart right next to it. Here you go.
There you go.
Share that. It's the exact same thing, right? Pull up the software chart, pull up the AI chart. It's the same thing. And I was taught we want to be selling the frowny faces and buying the smiley faces, right? And you're seeing these smiles. And by the way, that resistance is right around 33, 34. Stock's already at 37 pre-market, breaking out above that. And I guess my point is, it shouldn't be all that surprising, because all of the other sector ETFs and stocks that look exactly like this are doing this. They're resolving higher. So two things. Number one, if you see a chart like this and you're wondering, is it going to resolve higher, is it going to resolve lower? I think the weight of the evidence is suggesting that the higher probability outcome is an upside resolution, number one. Number two, where do things change, right? Where do we decide that we're going to start spending more time looking for stocks to sell as opposed to what we've been doing, spending most of our time looking for stocks to buy? Well, if these breakouts that we're seeing, these resolutions to the upside out of these consolidations, if they start to fail, if they break out and lose that support, if they are failing to break out at all, right? Those would be some signs that things are changing. But when you ask yourself, have we seen that? Or have we just seen more of the same, that these resolutions are resolving to the upside? Just throw the software chart one more time. The one right before that. Just to reiterate, because I think software is just a great example of these growth areas that just got slaughtered off the 2021 highs, just destroyed. Did anything do worse than software? Maybe cloud computing, maybe. But nevertheless, software is a great sort of proxy for that growth trade, both to the upside after COVID and then to the downside after the peak in 2021. So if you're wondering, because software has been such a great bellwether for that group, what they do here and how these consolidations resolve, I think are going to be a great tell for that space.
Yeah, I just want to comment quickly on what is moving this morning in the pre-market. It's like literally everything tech, like everything. Any strand of tech, it doesn't matter what flavor of tech you are, you're up, right? Whether it's like the big caps, right? Nvidia, Netflix. With Netflix, I saw that someone tied them to AI for some reason. It doesn't matter if you're like super beaten down growth tech, right? Like Wayfair, right? Obviously the chips are up, right? I mentioned Nvidia, but Marvell is up off their report still. AMD is up. Every flavor, whether it's like the mega caps, it's the SoFi. So what's SoFi up this morning? SoFi is up almost 8% this morning, right? UiPath, Palantir up 7%, right? Marathon Digital, the crypto miners are all up, right? Carvana is up 5%, right? So every flavor of tech up this morning, just broad based.
And a lot of those growth areas, a lot of those stocks that you just mentioned came into the year with super high short interest. And let's remember that these tech stocks and these growth stocks, the ones Spencer's we're talking about, they got destroyed off the 2021 highs. But these bears, these perma bears, in their infinite wisdom, rather than covering their short positions after historic declines in these stocks, 60, 70, 80 or more percent in some cases, they didn't cover their shorts. They added to short positions the whole way down to the point where they came into the year, into 2023, the most short they were the entire time in these stocks. And yes, were there some traders that covered their shorts on the way down? Of course, we were short tested in the fourth quarter. Yes. But in aggregate, which is what matters, they came into the year the most short they were the whole time. So this is just continued squeeze. Have things changed dramatically, fundamentally? You can argue that because interest rates have done what they've done, maybe, but let's be serious. These are shorts that are getting squeezed. Earnings do not drive stock prices. Positioning does, or mispositioning is really what really does, and that's exactly what we've seen.
Okay, you know what? It's 8:58, and I see him backstage. So let's bring Michael Nauss on the show right now. He's the founder of Stat Edge Trading. He's also from Trade Ideas, and he came prepared with some charts to discuss. Let's get Michael on the show.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Michael!
The Nauss.
Uh-oh. Wait.
Are we on mute?
Mike.
Are we on mute? Unmute yourself, Michael. Come on.
Oh, here I am. You hear me now?
There we go.
Okay.
Come on.
What's going on?
What are we buying in Canada this morning? By the way, sweet beard. That beard is
yeah.
That's the hottest beard we've had on the show, right, Spencer?
Oh, there we go.
Oh yeah.
Is there a trophy on the way? Is that what's going on?
Well, listen, this is like episode number 7 or number 8 or something like that. So it's a small sample size. So easy on the trophies, right? We don't hand out 7th place trophies around here, right?
I will challenge the entire FinTwit community to come on and beat my beard. How about that?
I'm rooting for you. You know, if it's up to me, Michael Nauss wins the trophy, but we can't just be handing out trophies 8 games into the season, right? You know what I'm saying? Like, let's give some other people an opportunity. Would you agree?
Absolutely.
All right, what are we buying in Canada today?
Well,
American stocks?
Always American stocks. You guys have the best market. That's the one thing I love about being so close is
what do you mean by the best market? The most liquid market?
Most liquid, most opportunity. To be honest, anything that's good in Canada's got an ADR down there anyway. So, you know, you can get exposure internationally, you can get exposure to Canada. You know, unless it's a really junky gold stock, you can probably grab it on the US exchanges. So,
and are there any restrictions in Canada for trading in American stocks? Like anything there you want to touch on?
No, absolutely not. And that's the beauty. We have a small amount of brokers here. We don't have as many as you guys. But yeah, I open up an IB broker. You have access to the US market, no restrictions, no problem. You can hold them in your retirement account. You can do whatever you want. So I would say 90% of my trading, even as a Canadian, is in US stocks.
Got it. So it's like America, but colder.
Pretty much, yeah. Colder and
more Canadians
and better beer. But
Better
right.
beer, huh? Wow. Is that true? I'm not a beer drinker, right? I'm more of a wine and whiskey kind of guy. But so I'll take your word for it. Is that just you being Canadian, or is that legit?
probably a bit of both. Depends who you ask. If you ask a Canadian, it's us being Canadian, or if you ask an American, it's us being Canadian.
How do you feel about that, Spencer? Would you agree with that, or you challenge that?
It probably depends where in this country you are, frankly.
Well, I'm
We're
talking
in
the
America.
big brands, right? I'll take a Molson Canadian or an Alexander Keith's
The Bat
over
Blue.
a little Bat, little Kokanee, all that kind of stuff over the big brands down there. But yeah, but I brought charts. If you
All right,
guys
let's
want to
see it.
talk
What do you got?
charts, I
Yeah,
got
we got. What do you want to do? ETN first?
sure.
All
So
right.
I was hoping to fight with Strazza because we've been on Twitter Spaced a few times. We're batting back and forth. So I'm a quantitative guy.
We'll get him on with you. Don't worry.
Oh, don't worry. We'll have that fight. I'm a quantitative guy. Everything I do, everything I come across is from back tests, from algorithms, right? You guys are top down. You guys are inner market. I'm more bottom up. So every night I come in and I run a back test, and that back test then spits out a bunch of names and gives me some ideas from kind of algorithms I made. So this particular one is just a weekend or a weekly rotational system, and it's got two components. The first one is risk on, risk off versus the market, right? So if the market's doing some things that I determine risk off, it sits out, it sits in cash. It actually just woke up about 3 weeks ago. So these are all kind of fresh names. One thing I did when I was going through the list is I took out all the semis, and most of the things, because it's relative strength, it's looking for breakouts. Most of the stuff semis, I figure your audience and everyone is just sick of hearing, hey, Marvell's breaking out, that kind of thing. And just like you were talking about, a lot of people are saying it's 5 names, it's the AI pump only kind of thing. But right off the bat, we have ETN was actually the top of the list. It was above NVIDIA. It was above all of the tech names, AMD, all this kind of stuff.
Which is an industrial stock.
It's an Irish automotive stock, $73 billion market cap, breakout to, if not all-time highs, pretty close here. And again, these are sorted
These are all-time highs, aren't they? All-time highs?
I think they're all-time highs.
Yeah, these are all-time highs.
So, right, a little more credence to your idea that, right, it's not just big tech, it's not just 5 names. This one's breaking out to all-time highs. Essentially, the way this algorithm runs is you try to get whatever best price you can Monday morning, and then put in some sort of ATR trailing stop and hold them as long as you can. So 53-ish% win rate on this. So all of these will have about that chance of working, and amazing risk reward. So yeah, automotive, $73 billion market cap. So it's, you're not worried about this thing going away overnight. Other than that, not too sure what most of them do, which you'll notice with a lot of these things. Next one is ALTR. This one's not all-time highs, but it's getting pretty close here. So we got a $4 billion market cap. That puts it more in kind of the mid-cap space. What's interesting about this one is it's already kind of almost doubled off of its lows there, right? So its lows were about $40, give or take, and it's knocking on the door of 80. I love when that happens, right? You get all of these stuff that are doubling off their lows, then they consolidate for a bit. Like you talked about, there's a lot of short interest in the market right now. If you get a double in your face and you're short, it's, you start to get yelled at. What you'll notice too is I put the RSI on the bottom of the screen. The crux of this algo is basically saying, show me stuff that when the market sold off, the weekly RSI never got under 30. Right. And I think this is a conversation we had as well. Those are generally speaking going to be the strongest stocks, right? If it can't get under 30 on the way down, it means that people weren't really panicking when they were selling, right?
So hold on, let me stop you right there and just kind of let me dummy it down for those listening who might not be following RSI. What Mike is talking about is the relative strength index. It's an RSI, has nothing to do with relative strength. It's a momentum oscillator, just to be clear, which means that it goes from 0 to 100. That's what an oscillator means. So it's a momentum oscillator. And in uptrends and in strong bull markets, you get overbought conditions. 70, it goes from 0 to 100, 70 is overbought, 30 is oversold. You get overbought conditions. People are like, oh, JC, I can't buy it because it's overbought. It's like, well, how can an overwhelming amount of buying pressure possibly be a bad thing? Actually, it's not. It's a perfectly normal characteristic of uptrends. And what Mike was suggesting is that obviously nothing goes straight up. You get pullbacks within uptrends, but what ends up happening is that you don't see oversold conditions. You never have that opportunity to get in. You don't see oversold. If you do see oversold conditions in something you think is an uptrend, you might want to question the validity of that uptrend. When you see overbought conditions, that's evidence of strong buying pressure. That's just a normal characteristic of uptrends. How did I do? Pretty good?
Pretty good. And just as the quant nerd, if you look at the math behind what RSI does, it's basically the average up move divided by the average down move, right? So if the average up move is really, really strong and the average down move is kind of weak, that's just going to tell you that you're in an uptrend. So as this thing is pulling back, and I've actually run a test about exactly what you're talking about, JC. I said, what happens is every time the RSI gets under 30, you bought the SPY, and it gets over 70, you sold the SPY. That's kind of how the textbooks teach it. And basically you participate in all of the down moves and you don't participate in all the up moves. So, right, you're buying at the beginning of 2001 and you're buying at the beginning of 2008 and you're buying at the beginning of 2021, 2022 when things start to break down. And then as soon as the market gets good again, you're out. So that's why I built this algorithm. I said, okay, well, what if I do the exact opposite of what a lot of the textbooks say and just buy the stuff that's never able to get oversold, or even buy them as they're breaking out. So a lot of these you'll notice, like ALTR here, it's just about to break through 70. Again, the textbooks say that's when you should be getting out of this thing. The math says a little bit different. It looks like something you should probably get involved in.
Something that Mike brings up is really, really interesting because we've all Mike and I are chartered market technicians. We have a CMT designation, which means that we've sat through a lot of exams and read a lot of books. Mm-hmm. Mike did it more recently than I did, so maybe I'd love to hear your thoughts on this. But when I did it many, many years ago in 2005, 2006, 07, what I found, and I didn't realize this at the time, but looking back on it, it's quite obvious. And when I go back and read the books, it's quite obvious that a lot of the intro to technical analysis, a lot of the, books on technical analysis really focus on mean reverting strategies and mean reverting conversations and the philosophy of mean reversion, when the truth is asset prices trend. So if you're constantly looking for mean reversion, you're putting the probabilities against you. And I think that the traditional textbooks in technical analysis, not all of them, so I don't want to just blanket all of them, but you'll notice that they, like Edwards and McGee, for example, which is super old school from the 1940s. I don't think they necessarily focus on a lot of mean reversion, but over the years, the more recent books seem to. How do you feel about that?
Well, I think it's so trading and investing really messes with human psychology, right? We're taught everywhere else you buy discounts, right? You see something and the price is going up, you wait for a discount or a sale, and that's the best time to buy it. But you're right, and there's not many things that we know for 100% in the investing or the technical analysis or the trading community. But one of them is fat tail distributions, which basically just means things trend way more than they should if the market was random. If the market was random, you would see a lot more mean reverting. The fact that you see a lot more trends mean that that's absolutely not the case. And I spent about 10 years in the hedge fund space working with different hedge funds, to basically trying to figure out how they make money and dealing with investors and all that kind of stuff. And so I have a pretty good data set to go from. And the ones that always did the best were always the trend following funds. They were able to get into these trends or these quote unquote bubbles and ride them up and ride them down. I was doing that in 2008. And the ones that were short all the banks as they broke down to new lows, those were the ones that survived. The ones who were betting on mean reversion in the banks were the ones who had to shut their doors. So there is academic literature talking about trading with trends, and then there's a lot of just empirical, the guys who've been around the longest. You look at, you've had on Brian Shannon and Lund and all these guys. If you follow what they do, a lot of it's just they're waiting for a trend to establish, and they're trying to find a way to get on that trend, and they're trying to stay there as long as they can.
Yeah, it's funny. Sean's just chiming in how Canadian guests are so much more handsome than our usual guests. Sean is not from Canada. He thinks he's Canadian because he's from Buffalo, and it's kind of like right there. So he thinks he's not Canadian. He lives in Colorado. He lived in Chicago. He lived in Florida. He's from Buffalo. He has no Canadian in him whatsoever. He thinks he's Canadian, which is hilarious. And the other thing that I wanted to talk to you about in terms of trend following, speaking of Sean, we put on this options trade in Meta a few months ago, and we have, we are very, very in the money in that trade. And I have caught myself. He's already out, actually. I have held, and on a couple of occasions, I have found myself looking to maybe take some off the table to take some profits. And I look at the chart and I'm like, it's still trending higher. It's still trending higher. And I haven't sold it. And it's been very, very difficult for me mentally. I shouldn't say it's that difficult, but I've struggled a little bit in maintaining that position. And every time I look, it's up even higher. And I thank myself for sticking to that. And the only reason that I've been able to hold the entire position is because I remind myself that asset prices trend. People are climbing this wall of worry. And then Sean's like, JC, we're so far in the money, we don't have to worry about that decay going into expiration next month. So I have that in the back of my head too, that because it's so in the money, you essentially have like a synthetic long, if you will, in Meta. So, to your point on the trend following, that has really helped me in this particular trade. So we're seeing it in real time.
Well, and that's one of the reasons that I am so quantitative and systematic, right? I've this back test, for example, goes back to the early 90s, right? And it basically just models what happens if you buy these breakouts, you hold them. That gives you confidence for a couple things. One is I know that there's going to be periods of time that it doesn't work. And I know there's going to be periods of time of drawdown. I know there's going to be periods of time of inactivity. I can always go back to the back test and I can say, this is normal. This is kind of what happens. But the main reason is I can test scenarios like that. Like what happens to this model if I start taking profits really early and it falls apart entirely, right? So what happens if I ignore a couple stop losses from time to time? It falls apart entirely, right? It's one thing that I love that you guys do with Sean is that every time there's an options call, this is where we're going to get out. This is how we're going to manage risk. This is where we're taking half off, because it lines up with all of my models where the strength in trend following is the fact that every now and then you're going to hit it right out of the park, right? Every now and then, like most of these models, again, 53% win rate on this one. You're not winning every time. You're not winning most of the time, but it's that every now and then that you hit it out of the park, but you need the patience and the discipline and the calm to kind of stick with it. And then, to kind of shut up the voice in your head that says, oh, you're up so much money, you got to sell. Because it's that one or two trades a year, one or two trades every few years that will really make the difference.
Because when I've been looking to potentially take some off the table, it really only is, it's gone up so much. That was my only reasoning. And then when I look at the chart, I'm like, that gap fill takes it to 300 and we're in the 250s. So, and it doesn't expire for another month. So maybe I should just hang on to it. And fortunately I have, working with Sean, I'm telling you right now, as much as I like to make fun of Sean, I have learned so many lessons directly from him. And this is one, like just understanding, the mechanics behind the in the money calls and, that risk of that deterioration, that decay, the gamma and the theta and all that stuff that decays into expiration when you're out of the money is not relevant here because we're so far in the money. So just a lot of lessons coming through from a trend following standpoint, from an option standpoint that have really helped me personally with this trade. Because listen, I know that when we talk and, we're breaking balls and it's me and Strazza and Spencer, like we sound confident and excited and I'm only confident in that I've done a lot of work. That's all I'm confident in. But, at the end of the day, we're all humans. We all have our own flaws. It's about understanding what those flaws are, trying to overcome them, continuing to grow. And if I'm going to give myself any credit at all, it's not about being super smart. It's not about being perfect. It's about my open-mindedness and willing to continue to learn. If I'm going to give myself any credit at all, it's going to be that.
Yeah, and it's a never-ending battle, right? In trading, kind of the worst enemy's yourself. I always think that as much time as I spend back testing and all of this, if you didn't have the discipline to follow through, again, this system had been in cash for a year and a half. That I traded other systems and shorter term systems and that kind of thing. But you're right, the temptation to say, well, maybe we've bottomed this time, or maybe we've and to deviate from that gets really, really strong. And It gets, I think sometimes the hardest thing is to do nothing, right? And whether you're in a trade and you need to let it go, or whether the market's just not lining up with what you want to do and you need to chill out. It's a really hard thing to do nothing.
Just because you didn't enter a trade today doesn't mean you didn't go to work. And I think
Right.
people like, oh, I didn't put a trade today, so I didn't do any work like that. Don't think that way. Don't think that. Michael, tell the folks where they could reach you.
I'm easily Googleable. So Michael Nauss, Twitter, YouTube, and then statsedgetrading.com is my website. I just send out a free newsletter with my market thoughts, so you can just join that. But nothing to sell
You hear that flex, Spencer? Just Google me. I'm kind of a big deal.
Google me, man. Google me.
I'm a big deal.
Michael,
Easy to find. No big deal.
Always a pleasure, man.
All right, my
Thank
man.
you very
Come
much
back.
for
Come
having
back
me.
soon.
Anytime.
Adios.
Anytime.
All right, it's 9:15, actually 9:16, which means it's time for our Kimmy Sokoloff segment, where she comes on and tells us what she's trading today. Let's do it.
Kimmy,
Good morning.
what's up?
What's up?
The stock market. I don't know if you heard.
Exactly. Trying to wake up, after a long
Mr.
weekend.
Strazza with his bull market, blowing his nose with his bull market jacket there. Good morning, sunshine.
Good morning, guys. What's shaking?
Oh, nothing. You tell me. Listen, market's up pre-market. You got the Nasdaq up 1.4% pre-market. You got S&P futures up 56 basis points. Dow's flat. Small caps up a little bit. Are you going with this trend? Are you looking to buy stocks, or are you looking to do a little fading after such a big move?
I'll see how they handle everything today. So let's see. Friday, it was like you threw a dart, everything went up. You could just buy, and it was easy. One of those days. Kind of in here, you're getting at the territory where it worries me a little bit. Some of these AI names and all that. So I will not be touching those.
And worries you why? Because they're running into resistance, or they're too extended?
Extended reminds me of this AI. Not saying it is. I've been trading since 1997. There are little similarities.
I know, but Kimmy, we're nowhere near the former highs in technology. We're nowhere near on a relative or absolute basis.
We could still go higher. I'm not saying anything. I'm not just saying anything.
All right. So one of the things for folks that are new to Kimmy, as much of the trend following as we talk about here, Kimmy on a shorter term time frame intraday is very mean reversion in nature. She puts the risk versus reward skewed in her favor, which I really, really like a lot. And on an extended basis, looking to short it. For example, last week when NVIDIA was gapping higher, 30% move, Kimmy made money from the short side in the morning. Granted, it continued going higher after her trade, but that doesn't change the fact that she was successful in that short entry, and obviously those who followed her as well. So just understand that there's a time and a place for everything. Kimmy does a killer job on that mean reversion. So you're looking for mean reversion in some of this AI stuff, some of this tech stuff. Give me one or two names in particular that got your attention this morning.
Well, I'm watching Tesla. It's the first time above the 200-day price since last fall, like September or so, early September. So I'm going to watch it. We did trade it last week. We did do well. Was it last week? Yes, I believe so. And so I'm going to watch it today, see how it handles the 200-day, which is roughly around $200. I'll see how it handles, if it could push through, or maybe it needs a little fade. Sometimes one time through it gets it, or sometimes it doesn't. Sometimes it fails. So you have to see how it acts, and then maybe the second or third time it pushes through. So I'm going to watch Tesla today. One of the names I'm watching.
What else? Give me one more.
I'm watching Twilo, TWLO. It's like right at that old school name. Oh God, I have alerts at 358 on it. That's how long ago I traded that, when it was $358. So, first time it's hanging out up here. It's having a little trouble. 200 days around 61.13, broke above it Friday, popped, but it's still stuck in this range. I'm going to see if it gets going up to 63, 64, if it can hold in here. If not, you stop out. But you always have to remember, and what I tell everyone in the room, my longs are 4 or 5 times bigger than my shorts, because shorts are easy to get crushed in. So if, listen, I don't discuss really shares. Sometimes people ask, listen, I'm not a big trader where I'm trading 10,000 shares. It's just not me. I'm not, if I do whatever it is, but like my shorts are substantially smaller than my longs.
But you
I
make,
think
but
myself, hey,
they
if I
move much
make
faster.
what?
They move. You're to the
But
downside. You're going to get a
there are
much
points
faster move
where
than to the upside.
correct, but there are times where I get super aggressive on a short, and then there's most of the time they're like a fraction. Like this SSOs I've been in since January. I sold half my position this morning. That's in my long-term account. Everyone in the room knows I didn't put it in my morning note because it's in my long-term account. I've had it since $46. I sold half my position at $52.74 this morning. I let them know. My other half I'm going to watch above. I'm going to watch above to see if I can sell the rest at 55.40. Doesn't mean it goes there today, or maybe it never goes there for a long time. I don't know. But I sold half my position, and that was a substantial position. It was my long. It's 2 times. It is aggressive, but the room does know that. I've been in a DIA short since April, since 340. It's hard to tell someone to stay in a short for 2 months or 2.5 months or a month and a half. So I just say, hey, this is what I'm in. It's very hard to stay in, but I'm going to stay with it. And it's been a nice hedge because I'm up 10 in it. Maybe I'll take a profit soon, maybe not, but it's been extremely weak, right? So it's something I'm watching. And listen, I'm not a hedge fund where I have to be long and short, but it's just sometimes I stick stuff on. So when the market goes down, it's like my account goes wee,
By the way, Kimmy, a lot of these hedge funds aren't doing much hedging. I don't know if you heard.
Well, they have to. They have a mandate, don't they?
Some do.
Some do. Well, the
Some
big
do.
ones
Most
do.
don't. Most don't.
No,
They can do whatever they
the
want.
big
In a lot
ones
of
do.
cases.
They have to, which
Some.
is a killer, don't they?
Some. Listen, if those of you looking to collect extra cash on a daily basis, some people don't have the time to be day trading all day. I certainly do not. But 50-60% of all of Kimmy's trades are in the first 30 minutes of the day. And I'd argue about 80 to 90% of the trades are in the first hour and 15 minutes of the day. So you don't need to be there all day. I actually don't recommend that you're there all day. You could bang out 4 or 5 trades in an hour and change. And with Kimmy's hit rate, it's pretty solid. Spencer, you want to let everybody know where they can reach her, how they can join?
Yeah, I just dropped the email on the screen. Email us questions at stockmarketmedia.com, and we will tell you from there how you can get access to Kimmy's room. It is exclusive, it is premium, and like JC said, she's there every single day at the open live trading. So Kimmy, we'll let you get to that.
Have a
Good
great
luck
day,
today.
guys.
Keep up the good work, Kimmy.
Bye-bye.
Keep killing it. Crushing it.
All right. Strazza is here, although there he is.
What's up, my man?
Oh, wait.
Is Strazza sick? You sick, bro? You all right?
Is his mic on? His mic isn't on.
Your
Again.
mic isn't on?
My mic is on.
Oh, it is on. Okay.
You feeling all right?
Yeah, I'm fine.
Oh.
I have allergies still.
How was your weekend? Good?
It was great. Miami won. We had a good time. Everyone had fun. Let me see your shirt. Yeah. Hell yeah. Dude. Good times. I'm going.
Good time.
As like a New Yorker, I mean, you're not a New Yorker, you're a Connecticuter, but are you extra happy that Boston lost? Like, do you have that hatred, that New York hatred for Boston?
I'm not one of those guys. Maybe it's because I was never a Yankees fan growing up. So like, I don't have that. Boston's a delightful city. The people are a little funky, but I'm not a Boston hater.
The people are funky. Hate on the people in Boston. I love Boston. I've never gone to Boston and had a bad time. How about that?
I'm the same way, man. I used to go to hockey games there. It's a lovely time. I love it. I have a lot of friends.
Good eats, but it's nice to put a whooping on them on the road in Game 7 though. That felt good. I like that. This is my recess. Is this my recess? All right, this is my recess, guys. Go Heat. In the NBA Finals. I'm not one of these fair weather fans. I've been there since day one. As a matter of fact, quick fun fact: in 1988.
You're saying I'm a fair weather fan? Is that?
Yes. You're not even from Miami, bro. The first game ever against the Clippers in 1988. That night, I went with my parents. I was 6 years old. My mom passed out at the game. We took her to the hospital after the game. As it turns out, we found out that night she was pregnant with my little sister. So it's in the family. We have it all in the blood. Yeah, and my sister married a guy from Boston. So I like to give it to him, stick it to him. So anyway, guys, listen, I got to hop today. Strazza, you take over. Spencer, always a pleasure. Love you guys. Thank you, everybody. Thank you, Michael Nauss. Thank you, Kimmy Sokoloff. YOLO responsibly.
Bye.
Always wise words to live by.
Yeah, that's great. Really nice.
Yeah.
I'll
All right,
wait
man.
my recess.
What's up?
I'll
What's
do
what's on your mind this morning?
I'll do my recess at the regular time.
That's cool.
Listen, we talked about, you know what's really on my mind? We literally talked about this little short-term topping pattern failing in Bitcoin, and there being a little bit of fireworks over the weekend for that long weekend.
Yeah, we did.
And did you see Sunday's candle? Right, 4.5%. So
I have to admit, I did not see Sunday's candle. Wait, do we have the chart?
no, I don't have the chart. I haven't even.
Let's see. Well, yeah, we got Bitcoin here from the chart report.
Look at this. That's Sunday's candle.
Yeah.
The day
right.
before the current candle.
Wow.
Yeah. So another nice save. When tops are not tops, man, look out, right? And I think cyclical stocks are walking a similar line right now, where there's a lot of charts there where I'm saying, wow, these look like tops. But then you have to kind of put that all in context of the broader market, which is things are ripping and everything looks great. So what if it's not a top? And when tops fail, you tend to get some really nice automatic reactions higher, just like we're getting in Bitcoin. And I think, maybe that's what we should expect for the broader market this week.
All right. Well, yeah, as we were talking about earlier with JC, I mean, every flavor of tech is up today, and Bitcoin falls into that, right?
That's right. That's a great point, Spencer, right? Like Bitcoin is a subsector or industry group of tech, crypto, right? And it's just one of those things where, dude, 2 weeks ago we were saying, when are semiconductors going to join the party, right? Like when are semiconductors going to wake up and start working, right? So maybe like crypto is just getting hit now. But you don't want to make the bet that Bitcoin is going to resolve lower in an environment where tech is ripping.
Yep.
Reasons that you just mentioned.
Okay.
Is Patrick going to join me today?
Yes, Patrick is coming on in like 2 minutes.
Oh, that's so nice. All right.
I know, but you're stuck with me in the meantime. Did you have anything on the hot corner or the hot list?
Why is somebody asking about Jeff Bezos?
You know why? We talked about this.
About it?
No, not. But you and I did in Slack.
Yeah, but Nicky Boons isn't in our Slack.
No, but wait, but let's do that. That's a good point, Nikki.
I haven't had time to figure out why he's filed for one share, but I'll do my best. We'll speculate. Let's go.
So yeah, the question was here. You know what? Let's bring it up on the screen. Why did Bezos buy one share of Amazon? Eagle-eyed Form 4 watchers caught this last week.
Yeah, I don't know. That's adjustment type stuff, right? We see this a lot when it's simply dividend reinvestment, right? Because think about that. Your share count rises over time without you actually going to the market and buying stock, right? So you'll see guys file for 1 shares, 2 shares, and it's really just dividend reinvestment. You're like, okay, that's fine. With Amazon, that's obviously not the case, as they don't pay a dividend. But when I look at something like this, I doubt that I'm positive he didn't go out and buy 1 share. Okay. So you have to ask yourself, like, what is this? It could be adjustment type stuff, right? Where his personal accountants maybe looked at his personal records and says, okay, Jeff owns 100 shares, but the SEC records have met 99. Let's true this up. Let's adjust this, right? And you get a filing like that. I think that's what this is. Nevertheless,
there it is up on the screen. There it is.
A huge net seller in 21 and 2. A lot of the big kind of tech titans were net sellers.
Yes.
At that point, wasn't that his divorce stuff, and that's all passed, right?
Yes. Actually, he's engaged.
What? He's a new one.
Yeah, he's engaged.
That's great. So that's nice. Maybe he can start buying stock again, right? That would be really cool for Amazon shareholders. Also, there are rumors in certain circles of him full coming back, which I'm not a buyer of at all. I think the guy's got a great life, and he's moved on to like space things, which these billionaires do over time. But that would be, man, that would probably set the stock on fire.
It would.
Right?
Yeah.
and it should, because he ran the company.
Amazon to new all-time highs. I don't know, maybe overnight if that happened.
Spencer, gun to your head, does Nvidia catch Amazon in the market cap race? Because they're not far away.
You're gonna have to fill in the blank for me a little bit. How far ahead is Amazon right now?
Maybe like 200 bill.
Oh, so like 1 day's worth.
Yeah, dude, they're right there. They're not far. Have you been reading all these sell side notes
No.
about Nvidia? Oh my god. Yeah, 1.2 trillion. Yeah, man. People are still talking.
But to answer your question, at the rate it's going, yes, of course, it's up another 4 or 5%.
Is it
or
really?
more this morning?
Unbelievable. Yeah, don't bet against big tech. Another 3.5%. Really, just incredible. Listen, we talked last week. That space was terrible because of formatting and me talking over everybody by accident. But I mean, dips will be bought aggressively if you even get them. This thing hasn't dipped. It hasn't pulled back at all since gapping higher on earnings last week. So,
you're right, and it's pulling everything else with it, right? So,
in such an incredible way. Can we talk about that? I've never seen like such an insanely broad sympathy bid. This is one stock. One stock just set the entire NASDAQ 100 on fire. I've never seen a sympathy bid like this in my life. It's really powerful, and it's not a bad thing. People want to buy stocks. Stocks want to go up. Don't fight trends. Let's get Patrick on here.
All right. I just got Patrick the link again, so he should be good to go.
Look at these things. KLAC. We're just getting so many new highs. Bonds, let's get a chart of KLAC. These semiconductor equipment companies, some of them just look so good. Look at Avago. I mean, this is just nuts. This is wild. This is a lot of fun. It's a lot of fun, especially if you own semiconductor stocks. Then it's a ton of fun.
I saw. Did somebody mention Netflix as like an AI play? I don't know. Maybe they didn't. Maybe they're making that up.
Side notes. That's funny. Yeah, Netflix is hot, man. It's in the right space. So the popular thing to do now with sell side notes, Sean, is write them about and create an AI universe, right? So Goldman's really good at that. I want to get the Goldman AI basket, and they call them, the way they said it was great. I really thought it was nice. I read it yesterday morning. They call them perceived winners, right? They're not saying these are AI stocks. Let's put them on a list. They call them perceived AI winners. I think that's really great. It's clever, and it's probably the right thing to do. In other words, they're saying some of these stocks are probably not AI stocks, but right now the market is treating them like AI stocks.
Well, okay, so there's always, that brings up a good point, because there's always like two realities, right? There's like this company is or is not actually in this industry, or the market perceives it to be, right? Yeah. So if the market perceives you to be, like for a time there, the market perceived GM and Ford as like the hot new, ironically new EV plays, right? Because they're the ones that are actually making cars.
Right.
So yeah, it's whatever the market perceives you to be at that time.
And so, for right now, if the market perceives it that way, that stock's cruising, right? So that's all that really matters, right? Perception kind of becomes reality on the stock.
Sure. I mean, Disney's a streaming play. Sure, it's like one part of their business. It's one business line. They have other businesses, but yes, the market.
How bad is Disney? Spencer, do you watch Succession?
Please don't say anything. I was too tired. I was not home this weekend. I started watching last night. I was too tired to finish it, so I'm halfway through the finale. Literally, I'm halfway through, so don't say anything.
It was a long episode. I can't believe you didn't watch it. I get excited. I start shaking come like 8
I wasn't home. I wasn't home all weekend. I got home last night. I flipped it on. I was like, I can't do this. It's too long. So
it was long. It was kind of uneventful. You don't want to talk about it? All right, I won't say anything.
No, I can't talk about it. I'll talk about it tomorrow. I cannot talk about it.
All right.
All right. Let's bring on Pat. Patrick Dunuwila, editor of the Chart Report, and he's here, and he has charts, and he has the buzz. So let's do it.
Good morning. How we doing, fellas?
What's up, P. Diddy? How are we doing?
All pretty good, Nice Tuesday morning. It's a little weird starting off the week with a four-day week,
It's great though, isn't it?
You guys are alluding to the fact that it's not Monday.
Right.
Correct.
Right.
That is correct.
Yeah,
Steve, you
short
mentioned
week.
something interesting last week. You were saying Bitcoin tends to do well over 3-day weekends. We've never really looked into it. We've never really quantified it, but I think someone out there really should.
I already asked Grant. And we already passed myself on the back for that. That was like the first thing I said. But yeah, totally. Right. Like it happened again. Another good Memorial Day for Bitcoin, I guess you could say. But we're
is that a failed head and shoulders or what?
We're going to run the numbers on 3-day weekend performance. Yeah, totally. But look, I was just saying to Spencer, these short-term tops, this was a T or a growthy short-term top, right? The big question for me this week becomes, like, I'm not going to be looking at tech charts first thing when I get to my desk every morning. I'm going to be looking at cyclical and value charts this week because I want to see those tops also reverse and start screaming higher. Turn your phone off, Patrick. Yeah. What do you think about that, though? Right? Like these value stocks, do they also fail and flip it higher? That's the big question for me this week. Tech and growth have already done what they needed to do. In fact, they could go sideways or correct the next few weeks, and that would be great, I think. I want to see the rest of the pack kind of get it together. And I'm looking at you, financials, energy, materials, industrials.
Yeah, how about like an XME, right? We looked at that one the other day. XME, I think it was like 6 weeks in a row it's gone down. And it has kind of a head and shoulders top to it. It's just an area that really hasn't participated that, like you said, it would be probably healthy to see some rotation into those areas.
And then I wondered too, it's like, these are commodity stocks. Do we absolutely need them? Do they have to participate? What if we just lost commodity stocks? Like think about the bear market of 21 and 22. Energy went up pretty much the whole time. Do we enter a place now where the rest of the market is working and trending higher? Energy or commodity stocks are falling? And would that break things? Right? All questions we have to ask. It probably wouldn't. We'll see.
A lot of those areas you mentioned, like energy, a lot of those areas you mentioned, like energy and materials and things like that, they're like the longer term trends are just kind of messy, right? For almost a year now, I think crude oil peaked in June of last year, along with energy and similar things. And they've just been kind of sideways and just a mess since then. Yeah. So, 100%. Maybe just more of that. That would be, I think, the least surprising thing to me.
Yeah, it's funny, right? When people look at charts, they say, is it up or down? And they often forget that third option of just neither. Right? Is it just sideways? And I think you're right. Especially like when I look at these charts, this is a great example, right? We took out the prior cycle highs. We are chopping slightly above that, critical form of resistance. Why can't we just consolidate longer? Especially after the run that these stocks had. If you look at something like XLE, it went from 25 to 100 almost, right? It basically quadrupled. So my point is they deserve some digestion here. And sideways wouldn't be the end of the world, Patrick. I would love to see sideways for interest rates, though, more than anything, as a stock market bull. That would really, that would be the right thing. That's what we need. That's an ingredient for just a raging bull market, is just dead rates, right? If the bond market just kind of, if we all just stop talking about it. What would be the best thing for stocks if we look back a year from now and we're talking about the Fed and everything else, and rates were still right around where they are today. It'd be the best thing ever. It would.
Yeah, that's something actually JC mentioned on our show last week on Trend Lines Over Headlines. We had JC on, and he mentioned, stocks just don't like rates going up or down too fast in one direction. If they just kind of based here, like you said, we might be able to move meaningfully higher. But what do you think about the dollar? Like last week, on a weekly basis, we had two-month highs in the dollar and rates. We kind of called those the wrecking balls all year last year. And here they are at 2-month highs. You also have the NASDAQ at new 52-week highs and the S&P at 9-month highs. So, that's not something you'd expect to see altogether, right? Do you think the dollar can keep going higher when stocks are also moving?
So basically, you're pointing out the fact that these charts have looked identical for the past several years, dollar and rates, right? So when we look at something like the dollar and we say, this looks extra toppy, has it topped and do rates follow? That's like the best intermarket work we could use the dollar for in terms of the bond market right now. Problem with the dollar is it came off hard. We got all those exhaustion signals last September and October. Dollar peaked, rolled over. You saw some significant downside there. What didn't happen? It never got oversold. I don't know if we have that chart, Alfonso, but the fact that the dollar, Dixie, never got oversold was always suspect, right? And we were sitting there saying, we really need that oversold reading. This was last year. We need this oversold reading for confirmation, right, of this downside action. Never got it. Pinged right around, 35, 40, never got oversold. Now we're rallying. It's just about overbought now, right? So the dollar is doing things that are not characteristic of a downtrend. So I think we got to be very careful. Like the dollar's still a sideways trend to me. They didn't knock it down yet. And do we get some sort of wild resurgence in the dollar during Q2 that weighs on risk assets? Well, I would say dollar has been rallying for a couple weeks now, and it hasn't mattered, but it will matter, right? We're not going to see sustained strength from the dollar without risk assets catching lower. So, the last couple weeks move was for real, and we're going to carry on higher here. That will weigh on stocks, totally.
We have that chart here, actually.
Look at that
the
thing.
XY.
Never got oversold. It was close. It was very close for a while. Never did it, and that was suspect. We were looking at this thing and saying, didn't get oversold. That's really strange. Now that we're seeing it back in rally mode, that really comes to mind, right? I think we'll probably get overbought this week.
Yeah. I think that point about it not getting oversold was very telling. I mean, it just really hung in there. For me, the level's around 103. I know Ian Cully and I were kind of debating about it. He likes 105 better. Do you have any preference there? As long as it's above 103, it's a little sketchy to me.
No, it's the low 100s. Totally 103. You can even carry that up to like almost 104 for those 2016 highs. But that's the level, right? If you zoom out on a chart of the dollar, zoom out to like 2014, right? You could draw an almost perfect rectangle in the price action. We broke out of this in the summer of 2022, and then we almost immediately retested. We hit the first target. We came right back down, got back in the box, but now we're at 104. We're ripping higher back out of the box. Listen, the dollar's in a weird place right now, and it doesn't look bad. It looks more good than bad. It's starting to look like just a textbook retest of those former highs.
Yeah, and just to reiterate, when the dollar looks good, that's bad for stocks.
Yes.
Well, should be.
Should be. That's also a good point.
Should be, right?
Dude, JC's out here putting poisonous thoughts in Spencer's head, saying things like, hey, does this dollar relationship with risk assets just end? You can't say that now. It's crazy talk.
Anything can happen. I mean, we've seen crude oil trade at negative prices. I didn't think that was possible, but it happened.
The dollar has been amazing from an intermarket perspective since COVID, really. It's been like 3 years now.
Right, but longer term, that correlation isn't really there, or at least as strong as it is now.
Fair, fine. But again, when the correlation is in place and that relationship is there, you don't bet against it. You just let it keep going. When it does come to an end, you'll see it. I don't think we've seen enough for that yet. They moved in different directions for a couple of months. I think we got to be careful. What was that?
No, I would agree with that. As long as it's there, it's worth heeding caution.
Dude, look, you could zoom out. Thank you, Alfonso. Chart Ninja, amazing. You can zoom out. There is a relationship. Yes, I understand these are emerging market stocks, not the S&P 500. But look, we want a lower dollar. As stock market bulls, you want a lower dollar, all things equal. Period. This chart shows that really well. I don't know, Pat. If you had to own an index for the next 5 years, would you want to own IFA or SPY? Next 5 years, you got to pick today. IFA or SPY? IFA or SPY? Go. And tell me why.
I'm gonna have to say SPY, just because of the long-term trend. You know, I get it. It does look a little bit reversally if you look at that ratio, but you got to stick with the winner. I mean, if you're just taking this thing and going to bed for 5 years, yeah, I'm going with US.
I think Spencer, what's yours?
I think 5 years is too long a period to not go with SPY. If you were to say 2 years, you could. I could be interested in IFA.
You can't change the time frame, Spencer.
I think it's a valuable exercise.
I said for 5 years I'm going SPY, but for like 2 years, I could be interested in IFA.
Okay, here's what I'll say. We all got ready for some mega trend reversal in favor of ex-US stocks, right? That would make sense. We saw things start to turn in favor of value. That was a big reason why we were kind of looking for that. That's all come undone, right? And think of what's going on right now. It's back to big cap tech. Tech is in charge. US has all the tech. If you think of who's going to win from this secular tailwind that is AI, it's all US. The US benefits most from this mega trend in AI. We have all the tech companies that are going to win from it, right? That should continue to drive gains. So if you start to think too fundamentally about this, you start to really skew to US is never going to stop out, right? And it has to eventually, but I don't think it's that time. And it wouldn't make sense for it to an environment where we're pointing to tech relative strength, growth over value. That's very US centric stuff, right? The relative trends are the US.
I mean, I'm like barely old enough to remember the last time that the US underperformed the rest of the world for a prolonged period of time.
Me too,
right?
Because we weren't in our professional careers yet.
I was in high school. Yeah. Not even high school the last time.
It never happened. It's really true, dude. It's very hard to bet against big cap tech. Period. I don't know if that's a relative trend that will ever reverse. So this must be the top. I'm saying that.
All I'm saying is,
move us along, or am I just going to ramble until 10 o'clock?
No, hey, actually, Steve, we should do. We should talk
about. Sorry, you go ahead, Spencer.
No, we should talk about the chart report, Pat. That's why you're here, right?
Sure.
Can we run the bumper again?
Yeah, if you want to.
Yeah.
You want to run it again?
Yeah, run it again.
All right, Pat, are you ready to talk about the chart report?
I sure am, yeah.
All right, let's do it. Okay, what do we got?
Pull it up. Show me the report. What are we doing?
Well, we have actually, you know what we have pulled up? We actually have the buzz pulled up. You want to start there?
Oh, even better. Even better, yeah. And I saw someone mention GRBK in the chat. That was one that we had taken off a few weeks ago. It hit our target around, I think our target was around 42. But that was a great trade. That one we caught in the buzz a few weeks back. I'm not sure about those other home builders that they asked about here, but anyway, let's get to the buzz. I bet you can guess what stock was on there. And keep in mind, these are a spike in relative mentions. So these tickers have been mentioned
on social media, right?
Correct. Yeah. In the past week, relative to their 2-month average, guess a stock that might have shown up.
So I noticed this, right? Because we had a few familiar faces, and then we had NVIDIA and AMD.
Yep. And the video is definitely on there. And also Broadcom. Yep.
Oh, Broadcom.
And that was,
sorry, Broadcom. That's what it was.
They look pretty much the same, both just textbook breakouts from 18-month bases. At this point, it's kind of hard to get involved if you're not already in it. The risk and reward is just kind of hard to define at these levels. But I mean, we think they're probably just going to keep going higher. They still haven't hit their Fibonacci levels. Broadcom's getting awfully close to it. I think that's around 480 or something, or I have to double check that. But it's already there. Yeah, 840. Look at that, just shooting up today. But that one's interesting because it releases earnings on Thursday, so that's going to be one to watch. It looks like it's rocketing higher today. But as far as some of our plays that we liked from this week's buzz, we saw a lot of AI themes. That's something that's also not too surprising. But also you're seeing investors kind of looking for not obvious AI plays, right? Like RXRX, Recursion Pharmaceuticals. That's one, whether or not they really are super involved in AI or not, it's in their description. So, investors are going to flock to this name. But, it's in a nasty downtrend, but it's emerging from that downtrend. Last week was its best week ever. And if it gets above that VWAP, I haven't seen it today, but if it gets above that VWAP anchored to the high, man, it could really go. But, I think, like I said, I think investors are really searching for a way to get in exposure to this whole AI theme. And what's up?
Yeah, throw the list back up. And Pat, it's funny that you say that, right? Because when I was looking through the note last night, one of the things I did do was go to Recursion's website because I did read the description. And I was like, what kind of monkey business is this? But they yeah, no, I think it's real. I think it's real. That's like a mid-cap stock. It's big enough. I really thought, I was like, what is Pat writing about? What is this?
I mean, Steve, when they mention AI and machine learning in their description, I mean, it's like, oh gosh. Like you said, who knows? I mean, who knows if they're legit or not, but.
And we were just talking about, like with Spencer, people are making lists of perceived AI winners. And that's all it is right now. If you're a perceived AI winner, you're going to catch a bid. It doesn't matter. The market's not at that step right now where they're trying to figure out who's real and who's not. They're just, shoot first, ask questions later type of thing, right?
Absolutely.
Perceived AI is going up. That's where we are right now. Maybe in a few months or quarters from now, we'll have to worry about, is this really a true AI stock or not? And then we'll start to pick the winners from the losers, but we're not there yet. Anything that's like, marginally exposed to AI is going crazy. And that was a good one. Pat, what did you think about all these retail stocks? Do you still shop at Urban Outfitters or Abercrombie & Fitch?
No, there were a lot of those like zombie type retailers, Urban Outfitters, Foot Locker. I can't remember the last time I went into a Foot Locker.
Wait, I actually have an update on that.
What's up?
We were making fun of these stocks the last week or 2 weeks ago because they all had earnings, right? But yesterday I was at Woodbury Commons, these outlet malls not far from me.
Shopping for deals.
I went into every retailer I hadn't been into in years. Let's see, I waited online to get into a Lululemon yesterday. Okay, I went to American Eagle. Where else did I go? I went to J. Crew. Oh man, there are so many that I can't even remember all of them at this point. I probably went to 15 stores yesterday.
Do you guys mess with these Lululemon, the Lululemon man pants?
The joggers?
Yeah, they have like a really comfy fit. They call them something like the Commission or something weird. They're like the stretchy, like the joggers. I have on joggers right now. Bird Dogs rock. But apparently people love these Lululemon ones.
They're comfortable. I don't have any myself, but I know they're comfortable.
Well, I didn't think you were there for the yoga pants. That's why I'm asking.
I'm not.
Yeah. No, I mean,
Uh,
people love these Lululemon pants. I got to get me a pair. Pat, you probably have Lululemon here, no?
No, I'm a Viore guy. It's big out here on the West Coast. It's just like Lululemon, but it's like the West Coast version of it.
That's the company that
Oh,
Barstool's
yeah.
talking about, right? Dave Portnoy's always, right?
It's I don't watch that, but I'm sure it is a pretty popular one.
You don't watch the pizza videos, even pizza reviews.
I don't watch the pizza videos. I don't need to see what Dave Portnoy thinks of different pizza slices.
You don't need to know anything about pizza. You live in California. There's
Exactly. It's just gonna make me jealous.
It's not tacos.
Hey, real fast. I just want to mention that the Buzz is a premium, or it's actually about to be a premium piece of content that goes out just to subscribers. Pat, tell people how they can get on the beta list for the Buzz.
Yeah, absolutely. You can easiest way is probably just email me. It's patrick@thechartreport.com. Super easy. patrick@thechartreport.com. Just shoot me a quick note and just say something like subscribe me to the Buzz. Done. I'll add you right to the list. But yeah, saw some good ones this week. RXRX was one. Another was Schrodinger. That's SDGR. Similar looking setup to RXRX. It's kind of coming out of a downtrend, but also has that AI tailwind behind it, which I think is very interesting. As Steve kind of phrased it, they're shooting first and asking questions later. If it just has any association with AI, you're likely going to see investors just pile into these things. And I don't think we're there yet where this bubble's popped. I don't even think we're close to it being decently inflated. I think before AI is really over, I think you're going to see magazine covers. You're going to see your Uber driver asking you which AI stock to buy. You're going to see, your drunk uncle asking you which one you like and asking you to take a peek at his AI portfolio and all that, right? And we're just not there yet.
I agree.
I got to say, we got 3 minutes to go here. Before we just start talking about the heat in my jacket, this market, the dispersion between the winners and losers is really getting out of hand, and it can't last. I've been looking at this and saying this to myself since last week now. It looks like exhaustion in a sense that we literally have growth groups ripping, and value continues to fall off a cliff, right? They're moving in opposite directions with momentum. It can't last. Somebody has to be right here. Somebody has to be wrong. I think we're going to find out very, very, very soon. Either these value groups got to catch higher, or growth can't keep doing this every morning, coming in gapping higher. So again, today you have tech, cyclicals, higher, communications, and then you have financials, materials, defensives all lower. So a little bit.
Steve, I'm kind of on that vein. I'm just like kind of awestruck at this move in Broadcom. I was looking at that chart yesterday and I was seeing it near this 840 level for Broadcom, and that's ticker AVGO. That right. 840 level, that was two different really major Fibonacci levels, and we just smashed through that today. It's still early. We'll see where we close, but I thought it would at least pause there. Wow. It's just ripping through it. And like I said, earnings this Thursday in a few days. So,
these big caps just won't quit. I think the best.
That is like a vertical move. That's getting a little. That's a little into business.
Look at Netflix today. That's the big thing to me. It's not just that they're going higher. We're getting some really bullish resolutions from some really big names. There's Netflix gapping higher, taking out those year-to-date highs. The reversal is on. It's been on. This thing's going to keep climbing up the right-hand side of that base. Yeah, the more I look at these mega cap tech stocks, the more I think all-time highs. That's where we're going. We're going back there. So,
all right.
Financials got to get it together. Did another bank blow up? I slept in this morning. Did I miss the latest bank failure or no?
No.
All right, great.
What? No.
Decent guess though, Steve.
You never know.
It did seem like for the last few months, every day you'd wake up and a different one was going under.
I didn't read any news. I was so pumped about Miami last night, man. Just so
All
good.
right. Is it time for recess?
Yeah. Please.
All right.
Can we just talk about how good this chat is? I wake up every morning just looking forward to reading what you guys got in this chat. So can I just shout out Matt Milam? Apparently we've hung out before. With the Case Schiller coming in positive, do they rip higher like Strazza on a Friday night? I love that.
Like Strazza on a Friday night. Oh my gosh.
Right? So cool.
Wow, our viewers know you very well, Steve.
Yeah, he knows me. We've hung out, I guess, apparently. No, I'm kidding, but seriously, Miami last night, like they just all the cards were stacked against them. I think they were getting 8 points in Vegas, right? And Vegas too. Let's talk about that. They're always right. They do such a great job, and they kind of psyched me out through the series. Even after Miami won the first 2 games, Vegas had the Celtics winning the series, and that's kind of unheard of. That's really wild, right? So they got back there, they win the 3 games, come back, force a game 7, and then they don't show up. It's just fantastic. And the game Saturday night was just a game for the ages. That was one of those, sporting events that kind of left you there in your seat like, what just happened? It was so good in so many ways. The fact that Miami hung in there that long, came back, basically won the game without Butler and Adebayo, there was a lot going on there. So these semifinals have been a great time. NBA's back, baby. Let's go. JC called me a fair weather fan. I don't believe him. I actually live here. I'm 2.5 hours away from the stadium. So this is my local team. Just
Strazza, you got the NBA Finals and the Stanley Cup. I mean,
So let's talk about that. So next weekend, guys, because I could. I've never been able to do this in my life. It would be quite manageable and not too crazy. Ticket prices were up to $30,000 for last night's game. I can go to game 1 or 2, hit the Florida Panthers Stanley Cup game, and then the next night go to the NBA Finals, right? I can go to Stanley Cup Finals kind of like back-to-back nights if I work it right. I kind of feel like I have to do it.
It's a once-in-a-lifetime chance, honestly.
Right? To see, but I've never been to an NBA Finals game. I've never been to a Stanley Cup game. And I could do both in the same weekend. I kind of feel like I would be an idiot not to.
I feel like you have to. I feel like you're obligated to.
You have to.
Yeah, so that's what
I'll
be looking for tickets. The tickets are actually incredibly reasonable. I'm used to Madison Square Garden prices. You can get 3 for what you'd pay for 1 at Madison Square Garden at the old FTX Arena. And let's also just keep calling it the FTX Arena.
I knew you were going to go there.
Now it's like a telecom company or something. Nobody knows what it is. I don't even know what it's called. So FTX Arena it is, right? Okay. Yeah.
All right, Pat, anything on recess for you?
Say that again?
You got any recess for us?
And recess for you. Oh, man. It was just nice to have a 3-day weekend.
You have anything? Yeah, what do you got?
Yeah, it was just nice to have a 3-day weekend. Caught up on some work. Took my dog out to a hike. We climbed a mountain. That was a lot of fun. Yeah, Pickle. Yeah, Pickle. Pickle is my dog. She keeps me in line. Keeps me out of trouble.
Speaking of pickle, my recess is that I played some pickleball over the weekend.
Did you?
How is that?
Yes.
How is that? What's all the rage? Tell us, Spence.
Let's talk about this. Let him finish his story.
I hadn't played in about a year, but
it's an early adopter. You were an early adopter of pickleball.
Oh no. Whoa. I mean, yes and no. Yes, in the sense that I actually remember we played pickleball in gym class in 2007.
Stop.
Wow, your school was an early adopter.
I swear to God.
Setters.
I swear to God. But I hadn't played in about a year.
Okay.
Played with some friends over the weekend, and I'm terrible, but it's great. It's a great game. It's awesome.
Is it like a tennis racket or more like a ping pong paddle?
It's an oversized ping pong paddle.
but it's a paddle. It doesn't have the net.
It's
Right?
a paddle, and you basically play with a modified wiffle ball that bounces.
2 people on each side, right?
Yep.
Do you
Or one.
do you section off? Somebody takes the right, somebody takes the left. That's how that works.
Yeah, or front and back. Yep.
It's all the craze here. The court's always packed, just jammed, and people are watching. And we have 1 court. So
No, talk about a trend. I was watching TV the other day. They got like shoes and stuff now, like pickleball shoes. It's getting extreme.
It's very much a thing. People seem to love it. Listen, this Nikki Boone's is saying smaller court. I thought they played on a tennis court.
No.
No, it's like a small tennis court.
It's a smaller tennis court.
It's
a great way to get outside and move your body, but not like work up too much of a sweat.
That's my kind of sport. That's
Yeah.
the kind of sport that I'm into.
Yeah.
Absolutely. That's exactly what I want. Yeah.
Yep.
You could drink beers while you do it, probably.
Yeah. Like no one's gonna like die of exhaustion playing pickleball, right?
That's no fun. So
Great. Anyway, all right. Before we go, we got to mention that Patrick Dunuwila is editor of the Chart Report, which you can get by scanning the QR code on the screen. Do that. Get the best charts and trading wisdom from around the world of finance. Edited by Patrick. All right, we're done. Thanks for joining us today, Pat, for an extended period of time. We appreciate that. Thanks to Kimmy Sokoloff. Thanks to Michael Nauss. Strazza, JC are here. I'm Spencer. Smash the like. More stuff coming. It's Tuesday, right? Not Monday. So we got Chart Request Live. You guys doing PTPA today?
probably I got to talk to JC.
Part of the price action. All right, probably. Stay tuned to Stock Market Media right here on YouTube. Thanks to everyone in the chat. We appreciate you as always. And good luck today. Have a great rest of your day. Happy trading.
Bye, everybody.
Good stuff. Thanks, guys.
Run it. I can't take no loss. I don't even know what it costs.